All right. Hey, everybody. James Boardman here with the Premier Home Experts team at LPT Realty. And I also have a special guest today, and that is Jason Johnson, and he is with Caliber Home Loans. And today, say hi, Jason.
Good morning.
Hey, today, guys, we're not going to make this video super long because I know people get bored, especially when you talk about mortgages. But there was a couple things I was thinking of that I've seen in the market where buyers are just really hesitant right now to pull the trigger for two main reasons that I'm seeing. The number one reason really being the interest rates, and number two, sometimes with the credit, which we'll get into in a minute. First, I just wanted to say who Jason is. Jason is my preferred mortgage lender. He's also a personal friend of mine. And we've been working together for, what do you say, Jason, like 4 or 5 years?
At least 4 or 5 years, correct? Yeah.
Now, the reason why I got turned on to Jason and why you should listen to him, other than he's beautiful and bald, is that he's actually come up with very creative financing options for people. So, for example, I've talked to buyers and they're like, oh man, there's no way I could buy right now because of this, that, and the other thing. I'm like, well, hold on, hold on. Why don't you talk to my lender, talk to my preferred lender? He's an expert. Maybe he can help you. And there have been several occasions where Jason has taken those buyers for myself, for others on my team, and got them to the closing table. And most notably, last year, I personally had a nightmare loan buying my own house. Just going to throw it out there and be honest. This guy made it happen after a rigmarole of about 6 months of bullshit. So if anybody knows what they're doing, it's this guy. So now that I pumped you up, Jason, and people are actually going to listen to you, let's get into the good stuff. So
Absolutely. Go ahead.
so basically, what I have been noticing in the market, talking to buyers, talking to other agents, training other agents, is that it's very slow right now. Mortgage people are complaining that it's really slow. And I'm trying to dive into like what's really going on with the market. And I know the economy is kind of weird, but the common answer is that interest rates are too high because you saw it 3 years ago, 4 years ago. Hell, even last year, I have a 2.75 rate on my house. That is not around anymore, and most of the rates are triple that. So people have lost buying power in general, and they're just overall like, well, I'm just going to wait for the rates to come back down to like 3 or 4%. Which could that happen? Maybe. Is it likely to happen very soon? I doubt it. But I just wanted you to shed some light on that, and what can buyers do in this market with these interest rates to get themselves in a home?
Yeah, I'm glad you asked that, James. So a lot of things I've been seeing lately is, rates have been higher. Get the elephant out of the room here. It's last October rates were 7% or above 7%, which was as high as we've seen since 2005, 2004, somewhere in that range. So we had really high interest rates, and it was a shock to a lot of consumers. So to combat that, I've seen a lot of things happening. Sellers getting aggressive, buyers getting aggressive, negotiating. We've been seeing a lot of seller concessions. What I mean by that is sellers are agreeing to say, okay, well, we'll sell you the price at home at full price, but we're going to pay for 4% or 5% or 6% of your closing costs, which is huge for buyers because buyers can take that money, not only pay for their closing costs, but other options allow you to buy down. So, for example, right now, one of the most popular products a lot of consumers are using is a 2-1 buy down, which back in 2003 and 4, that's all we ever did. So rates were 8%, 8.5% when I got in this market in 2003. Almost every seller was offering a 2-1 buy down. So what that means is if the rate is 6.5 today, just throwing that number out there, and you get a 2-1 buy down, that means the first year, it's not an ARM loan. You have a 30-year fixed rate loan, but your first year, the rate would be 4.5%. The second year, the rate would be 5.5%. And then the following remaining term of the 30-year balance would be 6.5%. Sellers can pay for that. Consumers don't have to pay for it if they can negotiate it with a good realtor. And it helps make the payment a little more affordable to get into the house. Now, the beautiful part about the buy down is it's not an ARM, it's an escrow account. So, for example, if you get into a buy down, seller agrees to pay for it, and your rate's 4.5 the first year, and rates do come down, which is projected next year, rates to come down. They've been coming down over the last 10 days. We've seen a decrease in interest rates, which has been phenomenal. We love to see that. We don't want to see rates at 7%. If you refinance it, you get a portion of that money back because it's held in escrow. So the buy down is just temporarily reducing your payment. And if you refinance or sell that property, you get a portion of that money back when rates do drop and you take advantage of a refinance. So it's a great product that sellers and buyers are agreeing to do to help make homes more affordable. I've also had clients get in and say, I don't want the buy down, but I want to use the points. traditionally points are prepaid interest, just buy down your mortgage interest rate. So you'll see lenders advertising, the average interest rate now is 6.63. That's the national average. That's just a rolling average of interest rate. But you'll see some lenders advertising 5.5 with a much higher APR. That's because they're buying points. So you can get into the fives right now, but it's going to cost you up front. Again, negotiating with a good realtor can help you get that to get a lower interest rate in case you don't want the buy down. That's what I'm seeing right now.
So basically, just to recap, what you're saying is that if you have an awesome realtor like myself who knows how to negotiate, like we can actually negotiate seller concessions from the seller so that they pay them out of their net proceeds, and then that money can go towards the buyer getting a lower interest rate.
Correct.
And
Yep.
then if they do the 2-1 buy down and the seller is paying for it, then they can also even get some of that money back down the road if
Yes,
they decide to refi. That's
that's
awesome.
correct. Yep. And the other thing is, again, closing costs. If you have a veteran or somebody wants to get into a house with first time home buyer programs, the seller can pay the portion of the closing costs. So, for example, I had a veteran close last month. He had $1,000 earnest money. The seller paid $14,000 and $500 of his closing costs. He got all of his earnest money back, but it cost him $100 to get in the house.
That's awesome.
Phenomenal. So it's a great
Absolutely.
time to buy, in my opinion, because you can negotiate where a year ago you could not negotiate this.
Yeah, that's one of the points that I'm going to talk about on another call, is that it is a great time to buy because we finally, buyers finally have, a little bit of what you call power back, where they're not just bending over and taking it, if you
That's
will,
correct.
from these sellers. It's actually more of a fair playing field now, like it was, 5 or 6 years ago, which is awesome. Cool, man. Well, I appreciate that. And then the other misconception that I keep hearing in the market, and I don't know if you have as well, is credit scores. And then this isn't just more recent, but it's been going on for, ever really since I've been in the industry. There's been a misconception about credit scores. And then even more so lately, it's been a little wishy-washy because there's new programs that some of the banks are coming out to drive business. Basically, if I call a buyer and I talk to them, and a lot of times they'll tell me, well, James, I do want to buy. And I'm like, okay, great. And they're like, but I have to wait, or I have to work on my credit. So I usually cut them off right there. And I'm like, well, hold on, time out. If you don't mind me asking, what's your credit? Try to find out and gauge what their credit score is.
Right.
If it's like a 400, we have some major work to do, and we're just going to throw that out there and be honest. But if you're above a 500, if you're close to a 500, not all hope is lost. And that's where I wanted you to take over, Jason. And let's just say I provide you with a buyer's information, and you get on the phone with them and you pull their credit, and they have like a 520, 530, 540 credit score. I mean, you could potentially still help them, right?
Absolutely. So what you just said is absolutely correct. That's another misconception people talk about. And I don't know how many times I've gotten people, I got denied by a bank, or I talked to a realtor and they said, with my credit score, I probably can't buy. They talk to a good realtor such as yourself and you refer them over to me. And the first thing I do is pull the credit and look at it. Say, okay, based on your 527 credit score, you can actually buy right now if you have a down payment. Okay. Don't have a down payment. That's okay too. Let's look at credit restoration. We have several programs directly through the credit bureaus to simulate what we can do to get your credit scores up. So, for example, I had a client that was a 579 6 months ago. I ran the simulators, had them work on paying off 4 credit cards and a collection, got the credit cards in check so the balances were low and they paid off a collection. They closed 2 months ago and they were a 687. They went FHA and they were able to buy a house 3.5% down. So the best thing a consumer can do is talk to a credit expert. And there are situations where I can't help immediately. I have professionals that are trained to just solely work on your credit. I have a client right now that's enrolled in a 1-year program. They're going to be coming out very shortly. They're almost a 700 credit score. They have to get 2 more things paid off and they're done. They're ready to buy a house. And in the meantime, rates have been coming down. Prices have stabilized, which is phenomenal for them because 12 months ago, they couldn't negotiate anyways. There was 50 offers on homes. So they're in the driver's seat. They get to negotiate and go out and pick the house they want, and their credit's fixed. So there's hope for any consumer in this market to not only improve their credit, fix their credit, but if you can take the time to just talk to a professional, that's going to help you put yourself in the driver's seat to where you can go out and purchase a home and stop renting.
Heck yeah. Hell yeah, man. For sure. That's awesome stuff. Yeah, cool. Great. That's really all I wanted to cover with you today. Wanted to keep this shorter because people have low
Right.
attention spans. For all of you watching, I know you guys. So this was awesome information. So to recap, everybody, as far as the interest rates go, there are possibilities out there, and there are things you can do to still get a decent interest rate and get you in a home now. Now, Jason said the rates are, he's seeing a trend of it going down a little bit, and that makes sense because everything has come to a halt, and they gotta, increase the flow here of the real estate market. But at the same time, them going back to 3%, 4%, I don't know about all that. But, if you're in the 6.5s now and you can get it in the fives or the low fives, I mean, that's pretty awesome. It gives you a lot more buying power. And then you can even get some money back. And then to recap on the credit, don't worry about your credit at first. Obviously, make sure it's good. But like if you're in the 500s, or if you're close and you want to buy a house, reach out to one of us and we'll make sure that we get you in a program. That way you can get your credit score up as soon as possible so that you can buy and take advantage of whatever market we are in.
Nailed it. Yep.
Cool. All right. Well, thank you for watching, everybody. I am going to post Jason's info. Again, this is Jason Johnson with Caliber Home Loans. I'm going to post all of his contact information below this video, wherever I can, in comments, wherever it lets me. And then if you have any questions, or if you want to, further discuss this, reach out. You can reach out to me. You can reach out to him directly, and we'll both help you together. All right.
Thanks, James. Appreciate it.
All right. Thank you, Jason. And we're going to be doing more of these soon.
Sounds good. See ya.
All right. Bye.